Yes guys, hope you're all well and welcome back to another video. So the last time I did this video it got about 40,000 views, so I just thought I'd kind of update it with kind of what I'm looking at these days, and a few things have changed. So we're going to be going over round numbers, psychological levels, things like that. It's going to be quite a basic video in terms of obviously you're going to be able to understand it. And then yeah, we'll see what's what. So this is examples of round numbers on currency pairs. So usually a round number or a psychological level will appear every 50 pips. So let's say you're trading, GU, you're looking at, 136, 136.50, 137. You can basically just look at the screen there and see kind of the increments in numbers. What do you notice? They're all round, they end with a zero, they're easy numbers to read, and this is why they are very good for trading the markets with, due to the fact it's to do with human psychology. So if we are looking at the markets, me personally is one of the best confluences that I can use, mainly because you tend to find that there are nice reactions around these levels alongside other confluences. So as mentioned, a round number will happen every 50 pips, so the number will usually end in a 50 or a double zero or 100, whatever you want to call it. Obviously, if you are in my group, a spreadsheet is provided, etc. But obviously, just for argument's sake and for examples, GU 123, 123.50, 124, AJ 93, 93.5, 94, 94.5. So can you see how there's a difference in the format? That's something that some people do struggle to kind of get with. But if you basically go to any chart, look on the right hand side, it will usually be formatted. If you look, you can go up in 50s and obviously look at it that way. Okay. So this is why they work as well. So if you look at the institutions, the banks, the big hedge funds out there, when they are kind of predicting where a currency is going or where they are targeting in the market, they are not dealing with the decimal points of numbers. They're basically going to buy the euro, like you can see in this example here of Goldman Sachs. They said they expected price to reach 127. If you look at your chart, that would be 1.2700. If you look at the bottom, it also says that they recommend that investors go long on the euro, and the company increased its targets from 1.2500 from a previous of 1.2100. So you can notice how they are round numbers. They're not dealing with 0.6394, it is the whole number. Now, if you can see, most of these numbers are whole in the fact there isn't a 50 after them. I will go on to a chart example next where you can basically look and see what I mean by this. So on the right hand side of the chart here, you can see the numbers on the chart that I have outlined. You've got 0.62, yeah, sorry, it's 6199, but it's 62, 0.6250, 0.63, 0.6350. So every 50 pips, there is a psychological line. Now, sometimes the whole number will look more appealing and you may see some better reactions, but then I have noticed as well that even the 50s work very well as well, and that's what I personally use in my trading. So if we just literally look at this 0.6750 area here, you can see that price has come into the area and rejected it multiple times. This isn't saying that the round number is going to be a sniper entry like these two here, but what you can see is that price comes into these levels and there is a reaction. So if you trade price action, if you accompany that with other confluences, whether, I don't know, you use order blocks, trend lines, key levels, whatever it may be, if you can start putting confluences together on these areas, you're going to have an increased chance of seeing a reaction and obviously taking a good trade. If we look at the bottom left hand side of the screen, the 0.6350, this area held very, very well. And then what happens when price breaks above it? You see a rally and vice versa on the downside. So it's just something to take into account, guys, when you're looking at this. And why do they work? Let's answer that question. So mainly it's this human psychology. So humans naturally prefer round numbers and think that it's just a simpler way to put it. So as mentioned earlier, instead of having your entry at 1.999, you're going to have your entry at 2 on the dot. It's just easier, price is more likely to go there, etc, etc. Following on from that last point, it's easier to understand. as humans, as traders, we like to make things as simple and as easy as possible. So by looking at these psychological round numbers, it makes things a lot easier for us to look at. Institutional targets, you've just seen the reaction there from the screenshot I put of Goldman Sachs and their forecasts. That's kind of what they're dealing with. There's a lot of money coming in and out of the market at these areas. And then following on, once again, entry and exit points. For many people, if they enter at 149.60 into a buy, next area realistically is going to be 1.5 if they have a reason to believe that's there. What I also want to do now is go onto the charts and get up the yen. So you can see what happened the other day if I just bring this onto the screen now. You can see the other day that yen had a huge pump to the upside. Now if you look where price reacted, you can see, where did price pump into? Price pumped into the 200 level. Now why is that important? If we go into the daily, it's the most psychological number on this chart that you can see on that push. Because after 200, you go into, you know, like 210, etc., etc. But yeah, as you can see, price pumped up to the 200 area and had a large reaction. If you look at pairs like, I think it was even AJ as well, where did AJ go? AJ pumped up and went pretty much to 105 on the dot. And then following that, it has pulled back about 300 pips. So just these psychological numbers you can see work. Now, they're not always going to work because obviously the market sometimes has another driver behind it. But from what you can see regarding this, it's just another case of looking at the market, seeing where these big numbers lay. You can see here 95.5, or if you wanted to get in earlier, 95. Nothing special about that number there, but you can just see that's a number it went off the round number. So that's basically how I use the round numbers in my trading personally. It helps me, I've always done it, I swear by it. So I'm hopeful that this video has obviously kind of opened your eyes to that, and you do now understand round numbers that little bit better. All the links are in the description, obviously, if this video has helped you. But if not, guys, I will see you in next week's